Mic test. Live. Yay. Right. Today again my student isn't free, so I shall actually go through more questions on my own, right? So last time we did this, we did question 1, right? So today we'll move on to question 2. Uh all right. So for those of you who are seeing this for the first time or watching the VOD back, first of all, welcome to the channel, right? Um, a little introduction to this channel. It's mainly for education purposes, right? Where I teach slightly more beginner level or foundation accounting, right? The goal is just to help you guys, understand the concepts, the principles guiding our decisions, a little more, I'll say clearly, right? And also make it more relatable for you guys, because that's how I survived the dry process of learning accountancy, right? Um, so yeah, that's the goal of the channel. As for this series, right, it is really just um, going through questions, right, going through my thought processes, and yeah, really explaining how I think when I see a question, and hopefully during the test or exams, you guys can use some of the I would say thought process, right, to guide you through the questions, hopefully arriving at the correct answer. Um, and yeah, to be honest, that is really just the goal. And for me, why I'm doing this is it's just fun. Uh, to me, teaching is fun, so that's why I'm continuing to do it, right? So without further ado, I mean we still have 2 minutes before the official start. Right. So regarding educational streams, I stream every Wednesday and Friday, 12 p.m. UTC, right? Um, as for other streams, it is really on and off, but for now, it's really just gaming with friends, right? Um, in the future, there'll be more variety. So I was thinking of adding, study with me streams or even model building. I like building Gundams. I want to get back into it. So if you catch me on those streams, just stay and enjoy. It'll just be to be honest, quite a silent stream. It'll just be occasional sounds, Other than that, yeah, every Wednesday and Friday, 12 p.m. UTC, it's basically for now, every week, right? It will change sometime in August, when my schedule changes, right? I'll let you guys know. It's most likely Monday and Friday, 12 p.m. UTC as well. Okay. And other than that, yeah, I hope you guys enjoy the content. Hopefully you guys take something away from it. If you guys take anything away from it, it's actually great for me. I've done my job properly. Right. So oh, and also if you have any questions, something that you don't understand from my explanation, first things first, know that it's completely valid, right? Everyone understands things differently. I'll keep saying this as well, right? If you don't understand something, just ask in the chat. Yeah, I always look at the chat after my explanation, right? So feel free to just type in the chat. For now, there's barely any chatters, so I can actually do, focus a bit more on the students' questions. Right. If you are watching the VOD back, right, and you don't understand something, you could either leave a comment, right, or you could just drop by a stream. As I said, I stream at set times, right, and really just ask me anything that I've gone through before. I'll try to find an explanation that suits you, right. Other than that, there's still a form that I've set up in both. I mean, the link is on both Twitch and YouTube. Um, you can always fill that up if you have questions, right? If you have accounting questions that you want me to go through, You can send it to me via that form as well. I'll take a look at it. If I can answer it, I will go through it. If I can't answer it, I'll let you know on stream as well, saying that this is out of my depth. I can't answer this. Right. Alright, then without further ado, it is 2 minutes past. Let's just start the lesson proper. So we're going through question 2, right? We did question 1 the last stream that we did this. Did this series, right? So first things first, when you see a question, you look at what is required. So A part 1, right? You look at what they want from you first. So complete the following table to indicate the increase or decrease in profit for the year after correcting each error. So after correction. Okay, if no effect, then put a tick on no effect. Okay, so clearly they want you to firstly correct the error, right? So A part 1, correct the error, and then state the effect, right? So then we need to understand what are the errors, right? So the first error is this: payment of $500 have been debited to this suppliers instead of the other supplier, right? So what happened here? What was the error, right? What was the wrong entry that was made? So we gotta know that first before we know how to correct it, and then we can find out what the effect is, right? So what was the error? They debited to account of supplier FFD. I'm just gonna shorten it. This is a supplier. So what this means that this is it is a trade payable, right? It's a trade payable account. So trade payables are basically you know, really they are debts that you incur for a short period of time to your vendors, right? People that you buy items from. And the reason why this happens in the real world is because not everyone has just mountains of cash available to buy all the items they need, especially for a company, because even though we say cash is king, right? Having too much cash on hand means you are not using it efficiently. Why do I say that? Because if you store it at the bank, right, the interest rate of cash is a lot lower than inflation. And that is a known fact for most countries, right? So you would want to use that cash that gives a bit more returns, right? Like investing in other companies in terms of, debentures, which is basically you buy bonds from other companies, or you invest in other companies' stocks where you receive dividends, right? So these are the ways companies can use their cash in order to generate a little more than, what inflation really deducts, right? So that's why usually you would uh, owe your supplier some money. It is called buying on credit, purchasing on credit, right? And the entry that they did here, right, the error was them paying the said supplier, clearing their debt, right? So the credit will be to cash, right? And both are $500. Okay, this is the error, right? This is the error made, and the correction would just be to transfer it to a different account, right? Instead of floral displays, it's flora flowers, which is still a trade payable account, right? Still a supplier, and then you just credit FFD, which is also a trade payable, 500, 500. Oh, it's a bit off screen. Let me see if I can fix this for you. Let me just, there we go. Is it on screen now? Yep, okay. Right, so not to worry, these notes will be uploaded along with the video. The links will be in the comments of the video. So feel free to look at it, but honestly, just seeing the whole thing, it probably doesn't tell you much, to be honest. But you can still look at it, right? Right, so if you notice, this is the correction. Okay, and the one on top is the error. Oh, Oh my, what happened to my spelling? Okay, right. So if you notice, this credit and this debit are the exact same, just in opposite directions, right? So they actually cancel each other out to be zero. That's why it is called a correction. You're removing, essentially, uh, you're removing the incorrect account and then you add in the correct account. So the one highlighted in, let me change the color so you guys can see it clearly. The ones I pointed in red arrow are eliminations. You remove the error, like the part with the error, right? And then the one in green uh, is the correct journal entry that you want to get at the end of it, right? So this is explaining what a correction means. Okay, this is what correction means. And well, let's circle back to the question, right? The question wants you to state what the effect was. So the correction was, whatever that we wrote, debit FF, credit FFD. If you notice, they are the exact same accounts, right? Under the same class of accounts, which is trade payables, right? And you know, the effect will actually be nothing because you took 500 out of trade payables and you put 500 back into trade payables, right? So the net effect actually is no effect, right? Okay. So let's move on to question. Sorry, not question. The second error that was made. So, H paid business telephone bill from personal bank account, but recorded the credit entry in business cash at bank account. Right. So the error entry was um telephone bill. Right. So telephone expense. Why is this an expense? Well, it is kind of like a consumable, right? You need to pay your telephone bills in order to keep your telephone running. Your telephone itself can be an asset, right? Because, okay, let's recap the criteria of assets again, right? It has to come from number one, somewhere, somehow. Basically means it has a history, right? You gotta be able to say where you got this thing from, right? And the second and more important part is it can derive future benefits for you, right? So telephone is a good example of an asset. Why? Because well, you gotta have bought it from somewhere, right? So that's your history. You bought it from a hardware store, right? Um, and you're gonna have to use it for your business, right? You take calls. If you're running a restaurant, for example, people make reservations, right? They're gonna call you usually to make a reservation. So that's what the telephone is for, right? And you make a reservation, so you kind of know for that night you've earned that revenue, right? You've earned that income. So really, telephone is quite useful in the office, right? Regardless of whether or not it's a restaurant, a factory, whatnot, it's for communication, right? So that telephone is an asset. But the right to use a telephone, like you buy a number, you gotta pay your telecommunication, that can't really add any value to, uh, to the telephone itself. It just allows the telephone to function, right? So you can kind of see why we can't classify telephone bills as an asset, right? Because it's only allowing you to continue using it, right? So that's why we classify it as an expense, okay? And well, credit, the error was cash at bank, and this is the company account, right? But the money didn't actually come from there, right? So what was the amount again? 830. Right, the money didn't come from the cash at bank in the company. So at the end of the month, you're gonna have an issue where the numbers don't tally, right? The numbers don't add up because that $830 did not come from the company bank account, right? So when you go to the bank say, oh yeah, no, you did not pay this 830 from this account, right? So the bank would tell you, right? So that's how you can actually see the error. So what would be the correction here, right? Correction would just be um you gotta eliminate this wrong entry, right? The credit cash at bank. So you just do the opposite. You debit cash at bank for $830, right? And what do you credit? Well, let's reason it out a little bit, right? The owner put in some money, right? Um, you know, the owner put in some money uh by paying for the company's bills, right? So when owners make an injection or make payments for the company or pay the company, right? Essentially the owner is giving money to the company for the company to use, right? So that is the history of it. Like that's how the company managed to clear their phone bill, right? Somewhere somehow. Okay, so we got that criteria down. Um, and for this is well, it can't be an asset because the owner paid, right? Paid the company. Um, it's not really any future benefits to be had here, right? What about liability? Liability is the same criteria for the first criteria, right? Um, gotta appear somewhere somehow. The second criteria is future possible, outflow of some benefits, right? Like you don't receive benefits, you gotta give it out. So either in the form of payments, which is usually the case, or in the form of other things, right? Um, and here the owner doesn't expect, doesn't force the company to pay them back because, well, if you're owner of a company, right? Um, sure, you will want the company to, continue growing in order to get some other benefits out of it, but it is not a must, right? If the company is not doing well, you can't exactly, well, I mean, you could ask the company to give you money, but that's just not wise, right? And you can choose not to, right? So that choice um means that probability is kind of out of the question, right? So uh yeah, basically bottom line is second criteria doesn't exactly get fulfilled. Therefore, you can't put it as a liability. So if you look at the accounting equation, uh, A equals to L plus E, where A is asset, L is liability, E is equity, right? Um, you can't throw into A, you can't throw into L, so you just throw into E, right? Equity. So what equity is this? You can call it owner's capital. The reason why I call this owner's capital instead of share capital is because um, if it's share capital, the owner can't really inject money in like this. It is not um, allowed by law. The owner could buy shares from the company, but only if the company decide to issue the shares, right? So usually for this sort of cases, it's very likely either a partnership or a sole proprietorship, right? And if we look at the question, it is just one person owning it, so it's a sole proprietorship. Owner's capital. Um, the word explains it, right? So yeah, this is the correction. Basically, we are reclassifying the decrease in cash at bank, right, to an increase in equity. Why is that? Decrease in cash at bank is a decrease in asset, right? Because cash is, well, if we run through the whole process, cash is an asset. Why? Because, well, it got to come from somewhere somehow. Either the owner gave it or the company earned it, right, in the past. And you got to use that cash somehow, right? Investing, buying new inventory, all those activities. Um, so those usually would provide future benefits, right? So those are two criteria fulfilled. Therefore, it's an asset, right? So, when asset decreases, right? Uh, 830, right? it could also mean that your equity. Okay, wait. Let me think this through. Right. When your cash decrease, it's credit cash. Right. It decreases the asset. However, the same credit can apply to equity, which will have the opposite effect because if you remember, when you debit an asset increases, when you credit an asset decreases, right? And the anything on the opposite side of this equal sign would be the opposite effect. So when you credit, liability increases, when you debit, liability decreases. Same thing for equity. Right? So in this case, you're reclassifying it as from a decrease in asset to an increase in equity. And that's what the correction is doing here. So let's look at what was cancelled out. So the one in red again was cancelled out, right? And the one in green was the correct entry that you're supposed to put in at the very start. So yeah, and the effect of this actually to profits is actually no change. Why is that? Well, if you look at the telephone expense, right, it was never removed, right? And expense will affect profit. The profit equation is this, right? Revenue minus cost of sales, cost of goods sold, minus other expenses equals to your profit for the year, right? And your telephone expense will actually fall under here, other expenses, right? But because it was never removed, right? You didn't actually delete it with the 8 red arrows. So that still stays, right? And everything else, if you notice, doesn't actually affect profit. Owner's capital, even though it's the same as same category as profits, it doesn't actually affect profit, right? So error number 2, once you correct it, is still not no effect, right? Still no effect on profits. The third one, no record was made of the laundry expenses, right? No record. So when no record, the error is just nothing, right? You didn't do anything, therefore it's an error when you're supposed to have done something. So what's the correction? You just write down what was supposed to happen, right? When you have no laundry expense, let me double check if it's actually laundry expense. Yep, laundry expenses, right? Laundry expenses. Credit, it can be many different things. Let's just use cash at bank for actually no cash at bank. Let's not use cash at bank. Let's use accrued expenses, which is a liability account. Okay. So 725. Why did I not touch cash at bank here? Because it is risky, right? It can be classified into many things, but cash at bank, right? You actually confirm with the bank itself that you have made the payment, right? So if the bank said no, right, then your classification will be wrong. But if you put accrued expenses for now, right, and the bank said yes later, you can always just reclassify it and as you have paid it off, right? So at least in my opinion, it's better to classify it as a liability first before you confirmed that they was actually paid. In this question, it wasn't said, I believe. Yeah, so I won't assume that they immediately paid it here, right? But in the real life, please do confirm first if you've actually paid before you actually write this journal. Okay, so here there was nothing being removed, right? These two are just correct entries. Um, so initially, I mean, if you look at the profit again, laundry expense would directly affect profit, right, by decreasing it. And you having recognized it when it was previously not there means that previously there was no decrease, and then after you recognize it, there was a decrease, right? And accrued expenses is liability, so it doesn't actually touch profits. So for error number 3, once you correct it, it actually decreases the profit, right? And error number 4. Oh my, this is taking up a lot of space, I realized. Okay, a check for 2,950 received for conference, yada yada. Oh, okay. Receive a conference services has been debited to conference service fee revenue account and credited to cash at bank. Check received for conference service. I see. Okay, so this is an example of a correct account but wrong direction error. Okay. So let's see. Debited to conference service fee revenue. Okay, and this is a bit too long. This is the error. All right. Conference service fee revenue account. Credit to cash at bank. And the amount is 2,950. Okay, pardon the misalignment. Right. The correction is actually you debit twice the amount, right? So you debit cash at bank 2 times of 2,950, which is 5,900, right? And you credit the revenue 5,900. Why do we do this? Okay. If you look at the net effect, right? The net effect is actually debit cash at bank 5,900 which is this one. Oh, sorry, not this one, sorry. Cash at bank is this. So you debit this and credit this, right? The net amount would just be debit 5,900 minus 2,950, which is 2,950, right? And then you credit CSFR, which is credit balance of 5,900 minus 2,950, which is also 2,950. So this was actually the correction, right? And so initially, what was the error? The error was actually a decrease in profit, right? Because you recorded it as a debit, right? So when you debit anything related to profit account, it is decrease. And when you credit anything related to profit account, it increases, right? So with this in mind, as to why, right? Profit account is part of your equity. It makes up your equity under something we call retained earnings, RE for short. Okay. And if you realize for equity accounts, it's credit to increase, debit to decrease, right? So that is the reason why. And so the CSFR is a profit account, right? And we debited it 2,950 before. So it means that your profit actually decreased, right? However, you reversed it and then some in your correction. So profit actually increased, right, by 5,900 to be exact, in order to reflect the proper profit of the proper revenue of 2,950, right? So sorry, this was a mistake. It was an increase. Yep, there we go. It was an increase, right? So that is the answer for A part 1. Honestly, it's a handful, right? So let's go to A part 2, right? A part 2, just calculate the adjusted profit after correction of error. So what was the profit? Profit before correction was 38,300, right? So we start off with 38,300. And then let's look at the error correction one by one, right? The first one, no effect. We have established that. The second one, also no effect. We have established that. The third one was a decrease because we didn't recognize it at first, right? So we gotta recognize it now. So minus 725, right? And then what was the last error? The last error was an increase in 5,900. because we credited it, right? Plus 5900, which is, hold on, let me type it into the calculator real quick. 38300 minus 725 plus 5900, 434, sorry, 43475, right? And that is our answer for A part 2. It is more straightforward after you have gone through the entire process, so make sure you know the process well in terms of correcting errors, right? So I think this is the examiner's intent. They want to see how you correct errors. So in order to correct an error, you got to know what the error is, right? And in order to know what the error is, you got to know what is the correct entry. So it's a lot of steps involved. And it's perfectly fine to not get this the first time. So just make sure you practice a bit more. And I mean, for me, my memory is terrible, so I actually don't remember questions. So I can actually practice however much I want. But for those of you whose memory are very good, this might be a challenge for you. You might run out of questions. So in that case, usually what I think of is you rephrase the question. Nowadays, I think things like AI can actually help me with that. You just plop the question in and tell AI to rephrase it for you, right? And then they'll come up with different scenarios. That is one way you can practice, right? Uh, Personally, I don't use that because questions are infinite for me. I can't remember them for the life of me, but yes. Okay, so prepare the journal entry to correct error 1, narration not required. Oh, okay, we did that already. So error 1 is just the one where the wrong supplier was debited, right? So it was just you just have to debit, or what is the company called again? Floral Display, right? So Flows Floral Display, right? And the amount is 500, right? And then the next one would be you credit, let me read this, Flora's Flowers. Pardon the handwriting. 500 as well. Right, so that is the correction entry. State the effects on owner's equity of correcting error 2, which we can just refer to whatever that we just did, right? So increase by 830 if I'm not wrong. Yep. Okay. That's it. That's the answer. At least that's what I think it is. For me, I don't refer to the answers, nor do I create a script for these questions because I want to bring you guys through my thought process if as if I was seeing this for the first time, which I actually am, right? So hopefully you can follow this. If you can't, it's perfectly fine, right? Um this comes with a bit of experience, with practice, and with proper foundation. And most of this can be built by just doing it, right? So I think I'll say this right now. If you can go and buy practice questions, from where I came from, it is not expensive, right? It is okay, maybe to a student it's relatively expensive, but uh for me it's about, let's see, a few days worth of allowance, like lunch allowance, right? So it is pretty expensive for a student, I understand. Um but I don't know. If you prioritize getting better at a subject, then I think it is worth it. But again, please consider your own budget and things like that. If you really cannot spare the amount, then um I guess try to do the questions before I go through them from the VODs, right? Hopefully I give enough time to for you to read the questions. Right. So part D, right? Explain two examples of non-accounting information which a business might consider when deciding which suppliers to purchase from. Okay. Non-accounting information just means like uh, you know, um maybe how much debt this supplier has, or how much like um capital this supplier has, something like that. Anything related to accounting, right? So non-accounting information just means generic information, right? Um, could be let me think. I was thinking of credit terms. Not sure if that's exactly accounting. Usually it's not really. So credit term is basically how strict they are with chasing you for money, right? Sometimes they give you a week. Usually companies give like a month, right? And give discounts when they repay you back and all that stuff, right? So not sure if these are considered non-accounting information, right? Um Maybe one would be lead time. Okay. Lead time basically um how fast they deliver. Right. So for example, imagine you are low on stock, right? You don't have enough stock for the next day, and you gotta order no more stock. If not, you gotta lose money, right? By just sitting there and can't sell. So you gotta order from a supplier that delivers fast, right? Usually at a higher cost, right? So it depends on situation, right? If you have a lot of stock on hand, then you might want to look at suppliers that deliver a bit slower but at a lower cost, right? Lower price, more friendly terms, all that stuff. So these are things that you consider before you make a purchase. So usually what companies do is they ask for quotation, right? They ask different suppliers, right? Sometimes up to 3 or 5, however much they want, right? For quotation. So quotations are not really offers. They are just saying it's just giving an estimation. Usually it's reliable on how much it will actually cost, right? And yeah, and then companies see it and then they decide to agree on it or something. But that's up to the management and all that stuff to decide, right? So our role as accountants sometimes is to go out there and source for these quotations. Um, and maybe help with the evaluation, right? Like maybe ask them, oh, how long is your lead time? How long before we expect you to actually deliver, right? All that stuff. What is your credit term? Things like that. So, um, really, there's a lot of things to consider, right? Even the quality of the product, which might actually be the second answer that I'm gonna put in, right? Quality of product. Uh, you know, could be generally, right? It could also be how prone it is to damage during delivery. There's a lot of things out there. Quality of product is quite generic. If I would narrow it down, just be like maybe resale value, right? If you're talking about luxury goods or something, um, or if you're doing manufacturing, right? And you need, for example, okay, manufacturing of CPUs of certain products, you want high quality raw materials to produce these high quality items, right? So that's when you take into account the quality of the product when you are evaluating different suppliers, right? So sometimes cheapest is not the best, depends on what you're using it for. So hopefully, yeah, that gives you a bit of context on why we consider certain things, right? Resale value or just like um maybe manufacturing uh ease, I guess. I'm not sure how exactly to phrase it, but you can phrase it. Okay, so for these sort of questions, it seems very generic, right? So usually, I think using English and just phrasing what you think is enough, right? Okay, so move on to question E. State one example of accounting information which business might consider when dealing with suppliers to purchase from. Right. Um, Maybe something like let me think. Something like maybe gearing ratio. So what is gearing ratio? It just means how much the proportion between the amount of equity and the amount of liability the company has, right? So this is equity to liability. Right. So what does that mean? If you have a lot more equity than liability, it means that the company is um relatively self-sustainable, right? Because they can generate their own profits and then they can keep using the profits they generated in the previous years to generate even more profit, right? And the liability is just there as sort of like a, maybe they back when they first started, they got this liability, it hasn't been paid yet, sort of things. But if your equity is significantly larger than the liability, that is what we call a low geared company. And if for those of you who knows manual cars, right? Oh, sorry, low geared. At the low gear, the cars are more powerful. It can climb hills that are steeper, right? So same thing. The company has the um power, the raw I say funds to power through difficult times, right? So that is a low geared company. What about high gear? High gear means that your liability is a lot higher than your equity, right? And okay, let me write it out here. I think it's good for you guys to learn this. Right. So we talk about low geared company, right? This is where your equity is greater than your liability by quite a large amount. And then a high geared company would be when your equity is a lot lower than your liability, right? And this usually means it's sustainable, right? And the other one would usually means is either just starting, right, or unsustainable. Usually, um, right. So why do we say that? Because if you remember, liability you gotta pay back in the future, right? And in this volatile economy, right, no matter which time period we're at, economy is always volatile, right? Anything could happen. Um, and in tough times, you still gotta pay back your liability. When the time comes, you still gotta pay, right? So even in tough times, and then you pay, and then suddenly you realize, oh no, I don't have enough money to keep working, and the company will just collapse, right? So high geared, if you look at cars again, right? High gear, yes, they can run faster, but at the first sign of trouble, they would stall, right? No, not really first sign of trouble. That's a bit exaggerated, but you can get the picture, right? So what does this mean for suppliers? Okay, usually when you find a supplier, especially for, when you're doing trading or manufacturing, you want to establish a long-term relationship with them, right? Because finding a new supplier will take more resources, time, money, whatnot. And usually if you sign a longer term with a supplier, you get more favorable terms, right? You get slightly cheaper products over time. Your trust between the both of you will grow. This sort of things, right? It's a working relationship and it is mutually beneficial for both parties, right? To continue this because for them, you are a secure, revenue for them, right? So they don't have to keep sourcing for customers, right? So it is mutually beneficial for both companies to stick to a longer term commitment, right? So before you actually commit to this, you gotta know that you know your supply isn't suddenly gonna crumble, right? So yeah, that is why I'll say gearing ratio is a thing that you can consider, right? Hello, mushroom soup. Official receipt. Not sure what this reply was for. Um, it's okay. You can elaborate. While I go through the next question. Right. The next part is part F. Name the source document which a business uses to advise a credit supplier that the check payment has been made for a specific invoice. Right. Name a source document. Oh, is this what your answer is for? Official receipt. Advise a credit supplier that check payment has been made for a specific invoice. Oh. Usually I'll say it's payment voucher. So, for part F, okay, if this is what you are answering, right? Let me just write here for part F. Business used to advise a credit supplier. So credit suppliers are people who sold items to you, like sold to you, right? So you gotta pay back in cash in the future, right? Uh, so when you pay back in cash, the question is asking, how do you tell this supplier, right? Let me use a different color. How do you use this supplier in red? How do you tell them that you have made the payment already, right? So you can use something called a payment voucher. If I'm not wrong, I gotta consult the answer for this as well. Um, but official receipt is how the supplier tells you that they have received the money, right? Um, you can also okay, something called invoice as well. Invoice is usually okay for delivery. Invoice and delivery order are given together to you, and then you sign it to say that yes, I've received, right? Official receipt is usually when you receive cash, I think. So, for example, when a credit supplier wants to tell you that yes, I've received this amount, they would kind of issue a receipt, right? That is what I imagine would happen. Not exactly sure if that is what people do nowadays. But okay, let me check the answer real quick for this because I think it's important that we get this right. So give me a second. Let me get the answers. Okay, I'm back. Let me look at the answers real quick. Ito. Remittance advice. Okay. Um. Wait, this is F, right? Yeah. Okay, remittance advice. All right. Seems like I was wrong on this one. My bad. Remittance advice is the answer that they want here. From the English, I can guess. Remittance just means that, um, receive, right? Advice is just saying, is like confirmation. It's like, have you received this, right? So something like this. This is what I'm guessing it is because I've not seen this term before, right? Sorry if I got this wrong. But yeah, we're both here to learn, I guess. So this is the correct answer, right? Remittance advice. So let's go to G. State accounting theory which relates to use of source documents to provide evidence of a transaction taking place. Accounting theory. Provide evidence of a transaction. Oh, that relates to use of source documents. Okay, so uh, huh, interesting. I don't know the answer to this one either. So I consulted the actual answer, right? It says objectivity. Um, I guess it's true, right? Oh, okay, yeah. Mushroom, so you got it correct. Nice. Objectivity. Yes. So it basically means that you kind of um. Okay, how do I explain this? Um. Okay, let me see. It's been a while since I actually tackled this. Ooh. All right. Let me do this. Okay. activity. Okay. So what it just means is that it's based on solid evidence and free of bias. That is the so you gotta have solid evidence and free from bias. Okay, solid evidence just means that it has to be documented well, right? So things like documentation number, documentation date, um, the amount, right? You gotta be as detailed as possible to make sure that you are, referring to the correct item. So, for example, if this company ships like medications, right, batches of medication, each medication has a batch number, right? So usually they'll include that batch number in the invoices. So to tell the customers, this invoice is for this batch of medication, right? And it's shipped on this date, and whatnot. So be as detailed as possible, to allow the customers to link each invoice to the specific delivery, right? That is solid evidence. Free from bias just means that it gotta be a third party who issues the document, right? So for example, if you buy from a supplier who is not related to you, right? Other than the fact that you guys established a business relation, then that supplier will be a third party, right? And whatever information that they issue is according to them, right? They don't owe you anything, so they won't actually um try to twist things in your favor, right? So that is what free from bias kind of means, right? Obviously the technical term is way more complicated, and I don't want to dive into that. I just want a more generic explanation, right? Free from bias just means no preference, right? Over no preferential treatment over others, right? And solid evidence just means detailed documentation that you can use to, you can use the information to really trace to different things, right? Can really track down exactly when this occurred, right? So, all right, that is the end of question 2. Uh, to be honest, there's quite a few things that I got stumped by, but I think all in all, it's still all right, right? I would have lost maybe, let's just say all the theory marks. Maybe I lost 5 marks out of this, but to be honest, that's a number I can live by. But yeah, um, so to recap, right? We went through the first thing is, when a question asks you about errors made, right? So in order to, number one, correct an error, right? Like to correct an error and even state what the correction, impact is, right? You gotta, number one, know what is the error, right? And in order to know what's the error, you gotta know what the correct um, journal entry is supposed to be, right? And that's how you can work all the way back to getting your answer, right? Next, we went through, we kind of recapped what makes up profit, and we kind of recapped on the accounting equation, right? And then the rest is really work that we already did before, to be honest. Right, then part D, we talked about, business related uh, things, on why we want to consider certain things when we are looking at our suppliers, right? So this, you can apply it in real life, because if your boss asks you to suddenly source for a certain item, right, then you gotta think, right, what is the best supplier that will give me the best product for money for my company, for my specific use case, right? It's not the generic, just because cost is low, we will go to that one, right? You gotta consider more things than that. And then part E is the accounting side. For me, I thought about accounting. This is I'll say it's a analysis, like accounting analysis, gearing ratio. Um, it is slightly more advanced, but hopefully, I mean, if you don't understand it, again, it's perfectly fine, right? Um, but yeah, uh, essentially, you can use it to determine how well a company is doing. Like, sorry, not determine. You can get a sense, right? The actual reality will be more complicated than that. That's why usually when we do analysis, we look at multiple different metrics, right? Okay, then part F and G are just me fumbling, but again, the answers are there, right? For me, I am not too confident in my own answers for theory, so yeah, good job, Mushroom Suit. You actually got the answer right, right? And yeah, hopefully, those of you watching on stream and also in the VODs, you guys learned something from this. If you learned anything at all, to be honest, I'm really happy. It means that I have done my job. And yeah, that is actually all for today. Not sure if you're still in the chat. If you have, do you have any questions? I'll wait for maybe a few minutes, right? If you're not in the chat anymore, actually, let me just check. Mm, oh, okay, right. Do you have any more questions? If not, I will end the stream in about 2 minutes from now, right? Other than that, yeah, just announcement real quick. Um, Hopefully starting next week, I'll have more streams, right? However, they will not be this sort of education ones. Uh, the education ones will still be on Friday and Wednesday, 12 p.m. UTC as usual. Um, the other streams I was referring to will be more actually relaxing, just me hanging out on stream essentially, just doing my own thing, and feel free to really just sit here and you know it's really I hope to create a safe space. That's all I'm trying to do here. And sometime in August I would shift to a Monday Friday kind of teaching schedule because my schedule have changed by then. So it's to accommodate my own schedule and continue bringing this sort of content across, right? Other than that, yeah, that is all from me today. I'll be uploading the VOD and also the whatever I've written down onto the VOD will be on YouTube, right? And the notes will be on Linktree along with all the other notes that I've made before, right? Again, if you have questions watching after watching the VOD, or any time to be honest, you can always drop me a message during my streams or in the YouTube comments, right? If you do come on stream to ask a question and it's specific to the question, like to something I've went through before, then I think best if you actually state, where which question you're referring to. Sometimes I can't really remember. But yeah, other than that, I think yeah, there are no questions from the chat. Once again, thank you very much for joining the stream or watching the VOD, and it's really heartening to see, right? So yeah, again, thank you very much. I'll see you guys on Friday, 12 p.m. UTC. See ya. Bye bye.